Mike, I'm going to give you the first comment here. You know, it seems like when we saw the sell-off in the beginning, I thought, oh no, what are we going to have? Another sort of December sell like we saw last year. But then you sort of calmed our nerves. So nope, that's not what this is.
No, it's nothing remotely like that kind of a setup that we had last year. I mean, honestly, the market for a while now has been kind of monotonously strong, going up a little bit every day. The S&P since the early August low, closing low, is up 400 points. We gave back 18 of them today. So just to put it in perspective, so I do think you certainly in the new year probably have to contend with the fact that we have relatively full valuations. Bond yields are lower than you would otherwise think they should be given where the economy is. And obviously sentiment and the technicals seem like they're getting a little stretched. But honestly, it's nothing that really changes the story from what we've had that's kind of supported this rally for a while. Great credit conditions, not least.
Dave, not just been a strong year, of course, it's been a particularly strong quarter. Does that make the setup for January harder than normal?
Well, I think it does. I think the question now is what are we going to, from a macro point of view, what's out there to get better? We've got the trade stuff. The Fed's done their thing. The impeachment thing seems to be over. We've had some big IPO misses that haven't hurt the market. So I think the market's due for a little bit of a rest here, and I'm not, thinking it won't rest. I think rates have moved up, especially on the long end. That's helped the banks. But remember, last time we were in this situation, rates were going up and the market went down a lot. So I think there's a few things to have to work through here in January and February.
Dave, it's funny when you bring up all of those big macro headlines that we sort of hung on to pretty heavily throughout most of the year. In a way, it doesn't really feel to me like a year that we saw the S&P gain 30%.
Remember, it started the year at a pretty low bar, so I think it went down a lot. I was on last year on Christmas Eve when it made the low, so I guess I'm here near the high, so I feel a little better, like I've been redeemed or something. But I think it had this whipsaw. I think what is the market up 5 or 6% from that high? I don't know. I don't have the numbers. I think it's something like that. So it's not like we're making new highs and we're 30% above the old high. So I think to me, the issue this year was the Fed took care of us. They lowered rates 3 times. They fixed the repo thing. They grew the balance sheet. They talked about being accommodative. And that's why the market went up. And I think if the Fed stops that, next year, the market's going to have a more difficult time. I think fundamentals are great. The companies are doing fine. The question now is valuation. What are these things worth? And the Fed is helping us, but they helped us a lot this year. And the question is, how much are they going to help us next year?